G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the difference between day trading and end of day trading. Primarily it's a matter of preference, but also a matter of where you're emotionally oriented and in terms of where you can execute your edge the best. I'll be honest, day trading is not my forte. I've tried it in the past. I've had some success, but very limited when I've tried to get to sizable positions, and I've ended up doing damage to myself on the short-term time frames. Whether that'll change in the future, I don't know. I think there's significant opportunities there. But when you're day trading, you have to have, I think, a significant amount of confidence, and you have to know your system flawlessly and be able to have an edge where you can interpret the best opportunities for buying and selling on the shorter time frames. I think people who trade the 60-minute charts probably have a little bit more flexibility, but if you're looking to time the 5-minute entries and exits, I think you really need to hone your craft. You need to know the opportune times of the day to be trading. You need to be aware of news releases. You need to have accurate data feed. Even a 10-second or a 5-second delay from your provider can be the difference between a good fill and an average fill, especially on the 5-minute charts. I think you need to have extremely good preparation and journaling. I think you need to be able to cultivate that edge and be able to consistently reproduce that. Now, this is the next issue, is depending on how you're trading the daytime frame, is that you could be sitting there for extended periods of time. That's the second part of my equation, is that I don't like to be in front of the computer. I like to test strategies, and I'm always investigating, back-testing data and looking for some ways to find a better edge in the market, but I don't like sitting there to try and trade the market all the time. I really feel comfortable with end-of-day trading. I think there's significant opportunities on end-of-day charts. I think the return on investment at certain times of the month can be extremely good with very low heat against your position. So meaning that you might have a 1-hour risk and the trade may only go 10, 20, or 30 pips against you, but it may move 3, 4, 500 pips in your favor very quickly over 3 or 4 days. So you may call that position trading or swing trading end of day, but there's significant buying and selling opportunities on the end of day time frames as well. The difference is that on the end of day time frame, you possibly may have to adjust your position sizing and be more patient to grow your account size, unless you're using a large account size to begin with, and that the percentage of risk and your positive expectancy are enough for you to produce the return that you want. The day trader, on the other hand, if they're trying to produce an income, I think it puts them under an immense amount of pressure to take leverage if they're trading on a small account that could potentially be create risk of ruin for their trading account. So I think you need to be emotionally oriented to handle the short-term time frame stress. Once you click the mouse, immediately the spread shows your account in debit if you've got your profit and loss up, which I highly recommend you don't do, but you should be always trading with a stop in place if you're day trading and end of day trading. The beautiful thing for me for end of day trading is, as you can see, I can get down to the gym in the morning or go to the park with the dogs, come down to the beach for a swim. I have 3 young children. I really enjoy spending time doing things I love. End of day also allows you the flexibility to travel and still adjust or place orders. So, again, I think there's significant opportunities for day traders, especially around certain times of the day, the London Open and the US Open markets, using 60-minute charts as well as 5-minute charts. News announcements, interest rate rises, and non-farm payrolls all offer, I think, significant opportunities for traders that are skilled in trading those situations. So do your homework, stay disciplined, try out the different time frames for yourself. I think, in some cases, some traders will trade both time frames. It's whatever you feel emotionally oriented with, but also, wherever you can cultivate that edge. It doesn't matter how you do it. I love what Burke says. It's like, if you're making money, keep doing what you're doing. It doesn't matter what anybody else thinks or what anybody else says. So stay disciplined, stay focused, keep working hard, get outside, enjoy the beach, and enjoy the ride. Thanks, traders.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.